Hi, my name is Nur Aimuni binti Mak Nur and I am the senior accountant of this company.
Hi, my name is Nur Aisyah binti Roslin. I am the new executive accountant for this company.
And hi, my name is Nur Fatina Mila binti Rosli and I'm the new Group Chief Executive Officer for this company. And we will be presenting about Spritzer Berhad.
Let's take a look at our company background. Spritzer Group, established in the late 1980s, is a pioneer and the industry leader in Malaysia's bottle industry. Our company produces natural mineral water, sparkling natural mineral water, distilled drinking water, carbonated and non-carbonated fruit drinks, and functional drinks. On May 26, 1993, Spritzer Sdn Bhd was founded in Malaysia as a private limited company under the Companies Act 1965. However, our company converted into a public limited company and preserved the company's name to Spritzer Berhad. On 11 July 1994, four dynamics totally owned subsidiaries make up the Spritzer Berhad groups are Chuan Sin Sdn Bhd, Golden Pet Industry, Chuan Sin Captain Sdn Bhd, and Pet Master Sdn Bhd. For your information, in 2007, our company became Malaysia's #1 natural mineral water. The vision of our company is to be recognized and respected as the premier and the best bottled water producer. Meanwhile, our mission is customer satisfaction as the main goal, to be committed to manufacture the highest quality bottled water for the healthy consumption of the general population in Malaysia.
For this management approach section, there are three parts will be discussed here, which are factors to consider having a segment report, types of segment, and also Chief of Decision Making (CODM) and its responsibilities. Furthermore, there are three factors to be considered having a segment report. The first one is nature of the business. The nature of business activities, which is any activities taken by the entity with the aim to maximize the profit. Secondly, the information presented to the board of directors. The segment manager is in charge of its segments for making sure the segment's performance and communicating with the chief of decision making, also known as CODM. And lastly, the assistant of the manager responsible for the activities. The report evaluated by the board of directors should be consulted by the CODM, as they include accurate information about the entity's overall performance. Next, type of segments. The principle of business segment for Spritzer Berhad are manufacturing and also trading. There are also other segments included for this company, which are investment, property, and treasury. Now, I will explain about Chief of Decision Making and its responsibilities. Chief of Decision Making (CODM) is a function and necessarily a person. It has a function to allocate resources to and assess the performance of operating segment. It is likely to vary from entity to other entity. For CODM, it may be the CO, COO, CFO, senior management, or the board of directors. We are identified a few of CODM in this company. For non-independent and non-executive chairman is Datuk Lim Eh Heng or Lim Kok Cheong. Managing director is Datuk Lim Kok Boon, and for executive director is Lam Sang. Next, executive director and group chief executive officer is Lim Seng Lee. Non-independent and non-executive director is Chok Ho or Chok Yin Fat, while independent non-executive director are Datuk Nik Muhammad Pena bin Mustafa with Datuk Muhammad Adnan Kecil and others. They are responsible for making strategic decisions about the entity segments. Other than that, they need to identify the existence of managers and responsible for establishing policies, strategy objectives, as well as providing direction for quality management.
I am Nur Aisyah binti Roslin will explain more about process to reportable and non-reportable segment. 10% threshold test and 75% total revenue requirement. Operating segment that don't meet the 10% threshold test requirement are not classified as a reportable segment. It should be combined and disclosed under all other segment categories. According to the FAR570 operating segment, a reportable segment and non-reportable segment are recognized if they meet any of the following thresholds below. Quantitative threshold test combine three methods, which is revenue basis, asset basis, and profit basis. Firstly, revenue basis. The reported revenue of segment from sales to the external customers and inter-segments sale must be 10% or more of the combined revenues from both internal and external of the all operating segments. Secondly, profit basis. The absolute amount of the segment reported profit or loss is 10% or more of the greater of the combined profit of all the reported losses to be reported in the financial statement. Lastly, asset basis, which the segment assets are 10% or more of the total asset of all the operating segments. Using the 75% threshold test total revenue requirement, the total combined external revenue of identified reportable operating segments must be exceed 75% of total external revenue. However, if the total doesn't meet, then the additional reportable segment should be identified, even if the segment fails the 10% threshold test until at least 75% of the total revenue is included in the entity reportable segments. Okay, now we move to the report. We will be focusing on the revenue basis to test the 10% threshold test. Formula we will use is the total revenue of each segment divided by combined revenue of all segments multiplied with 100%. According to calculation, manufacturing accounted for 28.05% is more than 10% that it is a reportable segment. Next, treasury and others, which is 6.97% and 2.88%, which is less than 10%. Thus, it will be classified as a non-reportable segment. The calculation applies for all the segments stated in the table. To summarize, it shows that manufacturing, trading, investment, and property are qualified for reporting a separate statement. As we can see, there are two segments that doesn't meet the criteria of 10% threshold test, which are treasury and others. Thus, they will classify as a non-reportable segment. In this case, the company may choose to either report them as separate segments, describe its size, or report or combine them if there are similar segments, or present the relevant information under all other segments category. Okay, after we identify the reportable segment, we must ensure that the total external revenue of the reportable segment is at least 75% of the total external revenue. To calculate the 75% threshold test, we should take the external revenue of all reportable segments, just now divided by total external revenue of all segments multiplied to 100%, applying the 75%. The current reportable segment does meet the 75% with 90.31%, which is higher than 75%. To conclude, the reportable segment that will include manufacturing, trading, investment, and property, and the other segment, which are treasury and others, can be combined as non-reportable segment as all other segments.
So, this is the new segmental report that we have constructed. This report operates two segments, which are reportable segment consists of manufacturing, trading, investment, and property, while treasury and others for other segments. This report was prepared to show the total revenue, profit or loss, total asset, and also total liabilities. The total amount for revenue recorded was 36,722 million. There is a profit of 8,450 million after adding of the amount income and minus the expenses. There is no tax reported here. For total amount of asset is 673,000, while for the liabilities is 600,000.
Now, the conclusion of the first part, segmental reporting. There are two advantages and two disadvantages. The first advantage is it has better understanding of the financial statement, as it enables shareholders to gain a better understanding of the variances that may affect overall numbers. Secondly, it has better way to assess the risk and returns, as the risk of investing of the stock is a firm that reveals all information is lower than the risk in investing in the stock of a company that withholds information. The first disadvantage is the usage of external format for internal reporting in which managers will not get information that they really need. Secondly, it has slow decisions. The control in a corporation and ownership separation can slow down the decision making, as managers may find it hard due to the changes in the marketplace.
Okay, now we are move forward to basis of the preparation of the interim report. There are two bases of preparation of an interim report, which are integral method and discrete method. Generally, the basis of preparation of an interim report can be integral, discrete, or combination of both. For integral method, interim report is a fraction of the annual report and annual values multiplied fraction of the reporting period. Meanwhile, for discrete method, interim report is a separate period, for example, quarterly. The reports are prepared on the periodic basis. Spritzer is using a discrete method as a basis for preparation since the company prepares its financial interim report quarterly. The interim financial report is unaudited and has been prepared in accordance with Malaysian Financial Reporting Standard and FAR570 Interim Financial Reporting. And paragraph 9.22 of the main market listing requirements of Bursa Malaysia Securities Berhad. Since the interim financial report is unaudited, it should be read in conjunction with the group's audited financial statement for the financial year ended 31st December 2021. Next, accounting policies used in preparing the interim report. The accounting policy adopted in the preparation of the interim financial report of Spritzer are consistent with those applied in the group's audited financial statement for the financial year ended 31st December 2021, except for the adoption of amendments to Malaysian Financial Reporting Standards effective for annual periods beginning on or after 1st April 2021. Firstly, FAR 416 Property Plant and Equipment. Spritzer has measured its property plant and equipment at cost less accumulated depreciation and accumulated impairment loss. Soft cost includes expenditure directly attributable to the acquisition of assets. The carrying amount of replaced part must be recognized and all repair and maintenance costs must be charged as expense in the statement of profit or loss. Spritzer will use a straight line method to depreciation its property plant and equipment over its useful life. Secondly, FAR 140 investment property. Initially, investment property are measured at cost including transaction cost. Spritzer adopts a fair value model for subsequent measurement which reflects reporting period and changes in fair value are included in profit or loss. When the fair value of investment property under construction is not reliably determinable, the investment property is measured at cost until its fair value is reliably determinable. Construction is completed, whichever comes first.
For types of interim report, Spritzer was prepared a few of condensed set of financial statement in quarterly report, which is in second quarter of the year ended 30th June 2022. The condensed consolidated statement are statement of profit or loss, statement of comprehensive income, statement of financial position, statement of changes in equity, and statement of cash flow, and also notes to the interim financial report. Here are the interim reports that have been prepared by the Spritzer in second quarter ended 30th June 2022.
Period for the current and comparative of each statement prepared by the company. MFRS 134 prescribed that interim reports shall include the interim financial statements, either they are condensed or complete, for the period as follows. First is soft P, at the end of the current interim period, and the comparative soft P, as of at the end of the immediately preceding financial years. Second is SOPEL and OCHI for the current interim period and the cumulatively for the current financial year to date, with comparative statements for the comparable interim period. It must be current and year to date of the immediately preceding financial years. That is SOCF cumulatively for the current financial year to date. It must come with a comparative statement for the comparable year-to-date period of the immediately preceding financial years. And lastly is Sochi. It must come cumulatively for the current financial year to date with a comparative statements for the comparable year to date period of the immediately preceding financial years.
For this interim report, it will be discussed on second quarter of the financial period, which ended on 30th June 2022. The first statement is a statement of financial position. For the current year interim report, it is recorded from 1st January 2022 to 30th June 2022, while for comparative interim report is from 1st January 2021 to 31st December 2021, which is complete 1 year here. Next statement is statement of profit or loss and other comprehensive income. For the current interim report period is 3 months starting from 1st April to 30th June 2022. And for comparative interim report, it has the same period but it is recorded in cumulative way, which is ended on 30th June 2021. The other one, for the 6-month period, the current year interim report was 1st January to 30th June 2022, while comparative interim start from 1st January until 30th June 2021. For statement of cash flow and changes in equity, the interim report is in full until second quarter, which means in 6-month period. The current year starting from 1st January to 30th June 2022. And for comparative interim report is from 1st January to 30th June 2021.
Last but not least, there are 2 adjustments made by the company to be included in the interim report. The first one is property, plant and equipment. Property, plant and equipment as at 30 June 2022 is 338,636,000, while depreciation for 6 months ended 30 June 2022 is 9,247,000. On 30 June 2022, one of the buildings owned by Spritzer was badly damaged due to a fire. The company decided to conduct an impairment test for the building. The building was purchased in 2019 at a cost of 2,500,000. On 30 June 2022, the net sale value of the building was 2 million and the value in use of the building was 1,800,000. In determining the value of net realizable value, we must choose the higher value between value in use and net sale value. Since the net sale value is higher than value in use, hence the value of net realizable is 2 million. Then the amount of impairment loss is 500,000. Next, we must prepare a financial statement of financial position for the second quarter of the period ending 30 June 2022, considering the event that will take place on 30 June 2022. Okay, in conclusion, we can finalize that the total non-current asset from property, plant and equipment as at 30 June 2022 is 398,136,000 as shown in the table.
Now let's solve the second adjustment. The inventories of Spritzer Berhad 6 months ended 30 June 2022 is 40,490,000. The company had 150 million units in inventory at a cost of Rm 1.40 each on 30 June 2022. The cost of its inventories will change every year. As at 30 June 2022, the net realizable value, or we call as NRV, of the inventories is RM1.20 per unit. The expected NRV at 30 September 2022 is RM1.75. The solution is as follows. On 30 June 2022, the value of the inventory should be recognized at its NRV, as it is lower compared to the cost, amounting to 180 million ringgit, in which RM1.20 multiplied by 150 million units. The loss of inventories, 30 million ringgit, should be recognized in the statement of profit or loss, or known as SOPL. On 30 September 2022, the value of the inventories should be recognized, in which by using the cost of 110 million ringgit. Therefore, Spritzer Berhad should reverse the 30 million ringgit inventory loss that was previously calculated in the statement of profit or loss. The extract of statement of profit or loss shown is the final answer of the adjustment.